Hey, good morning, everybody, or mid-afternoon or evening, depending on where you're at. Today's October 11th, 2023. We will get started here soon. Right now, we're just kind of in the waiting room, waiting for the start time, which will be in about 8 minutes. Okay, and then we'll go in and recap. What I'd like to point out is that crude oil is approaching that zone. Also, has just filled the gap. We're just waiting for price to come into the buy territory. Currently looking at on the larger time frame, we had 8290 area as a part of a zone. Where did we go here? Let me get that part of. Yeah, right over here, 8290, 8234 on a 60-minute chart where we have that zone inside the buy territory. Okay. On a smaller time frame, I reduced down and have placed a trade at 82.71, 82.32 being the stop loss. So between about 82.90 and 82.71 is where I'm looking for that opportunity to go long. I'll use that 82.32 as a protective stop loss. Okay. I haven't started yet. I'm just kind of referencing some of the trades that we're in. And we're still in the Russell from the breakout trade into that pocket of points. And got a nice little bounce. Still looking for some gap fills, but we'll cover all of this and a lot more in recap and review session. All right, I'm going to mute and we'll get started here in about 6 minutes, okay?
Order filled. Order filled.
Hello, everyone. We'll get started here in just 2 minutes. All right. Hello, everyone. It's time to start. Welcome to the Mastering the Charts review and recap. We do a review of the live trading room and we do a recap and some deeper dive into some of our course material. Now, many of you that are participating in the Mastering the Charts review and recap here, we want to take some time and review the things we learned in the Mastering the Charts course. And at the same time, take a deeper dive into some more things to help us understand market environments, when to be an aggressive trader, when to be a trader that we pull back and kind of trade a little bit less. Okay. All right. Information contained in this presentation should not be construed as a recommendation or an offer to buy or sell any security or financial instrument. Additionally, information contained in this presentation does not imply the suitability of any investment strategy. We are not licensed brokers or investment advisors. All attendees of the presentation and purchasers of our content are encouraged to speak with a licensed representative of their choice regarding the appropriateness of investing, trading of any investment, and any trading strategy. We are using real-time market data and will be executing trades in a simulated account during our presentations. No offer on our part with respect to the sale or purchases of any security is intended or implied. Nothing contained in here should be construed as a recommendation to take a position in the market. The intent of this information is for instructional purposes only and educational purposes only. Any fair use of third-party trademarks or logos does not apply an affiliation or a sponsorship. All trading does involve higher risk. Past performance is not necessarily indicative of future results. We make no promises, guarantees, warranties suggesting that any information shared will result in a profit and not in a loss. You agree to not hold us legally or financially responsible for any reason. The purpose of this class is to recap the Mastering the Charts, Part 1. Part 2 and 3, in construction and process right now, are being developed. We also want to do some trade reviews and assessments. If you have trade reviews or assessments that you would like to share or post, you can do so in the Discord room, or you can do so here by sending an email to me at uh, either, either to me at jeff.manson@marketinstitution.com, or you can send it to admin@themarketinstitution.com, and those will get to me and we can do some of those assessments. We'll also be doing some mastering the charts review with stocks or futures and forex, and learn how to draw the buy and sell territories, how to go through our 5-step process. So one of the tasks that I encourage students to do over and over again is find hundreds of picture perfect past trade setups. Why do we do this? Well, the repetition is how we learn to trust what we see on the price charts and manage risk and dive into using that information to see if that trade fits within your trading plan. Part of that process is create the folder, save all your picture perfect past trade setups. It can be a winning trade, or they can be a trade that you discovered on the left-hand side of the chart that met all that criteria. Later on in the session, we will go and I will walk you through how to find a picture perfect past trade setup and look at all the components around it by using a 5-step process to identify where we have multiple trade opportunities, either as a breakout trade or waiting for price to come back to a demand or supply zone. Okay? It is important you document and collect your trade setups. The more you do this, and it usually takes about 100 times of doing it, then it sticks. Okay? Actually, about after 50, everything starts falling into place, and doing the additional 50 kind of sets everything in place. You start to see that picture without having to do all the 5-step process. Now, I still do the 5-step process. I still go through that as I'm explaining setups and education for those setups to help you manage risk and then look for potential profits. Okay. I'd also encourage you, after you document and collect your setups, is share a few of them in the Discord room. The Discord room has a couple of different tabs over on the left-hand side, and one of them is where you can place your picture perfect past trade setups. Okay? I encourage all students to post and publish their picture perfect past trade setups because this is what makes you stronger. I also wanted to point out there are some additional announcements and things like that are coming out. Okay, so make sure you update yourself in the Discord community room with the announcements of where we are going to be on live trading room, be held from the Market Institution website, not the YouTube live session. Okay, that'll be on Monday, October 16th. Also, live trading room, yeah, that's one we just talked about, isn't it? Yeah, community trading room, okay, which is tomorrow and Thursday and Friday, tomorrow and Friday, okay? You will receive a Zoom link in from the, if you are registered with the marketinstitution.com, okay? You will receive a Zoom link for tomorrow's session for the community trading rooms. Okay, that's where it's kind of an open mic. We just hang out. It's really a friendly area to where we all trade. Okay, it's usually that time of the week where I can actually do my own personal trading and don't have to worry about switching back and forth between accounts like I had to do this morning. Any questions, come out to the admin at themarketinstitution.com. These folks are amazing. They are very attentive of everything that you guys are doing, and they have the same values as far as making the student first and taking care of everybody. Okay. You also find that in this area you can get your links. If for tomorrow you didn't receive the email, you could come over to the announcements, and then I will post that Zoom link in here as well for you to attend. Okay. All right, so yeah, share in the Discord room picture perfect past trade setups, whether they failed or a success. We all learn from them. All right, so part of our morning session, okay, let's just step out to the markets here, but let me preface some of these. As I am putting together the pre-market routine, okay, and I do want to point that out on the Discord room as well, pre-market prep tab, okay? So you can see that the pre-market prep tab was posted about an hour before we started trading, okay? So I have some announcements. I have trading tips of the day. We have economic reports, what's in the news, what's moving the markets, what's not moving the markets. And then we have some charts for today that we're looking for additional trade setups, okay? There are some days where these trade setups are the only ones I'm focused on because the equity indexes are kind of in that choppy environment. With that pre-market routine that I do, I check the economic reports and the news. We look at the correlations. Today was an inside day on all the equity indexes at the open, so we call it an inside day, which gives us an idea of what type of action we should look for inside as the market opens. Inside days are a little more choppy. Inside days on the equity indexes, waiting till a little bit later in the trading session before you start making trades is also recommended. What is later? Anywhere from about 10:30 to 11 o'clock Eastern time is where we have documented and verified that some of the better trades set up a little bit later in the session on the equity indexes when we're in an inside day. We're also assessing trend, small time frame, high time frame. The internals are important today as a good gauge. We're seeing the trend is moving up as the markets are dropping. Okay, so as the markets are dropping and the trend's getting higher, that implies that there's some more buying coming in. Now, all this buying and indicators showing that just ahead of the FOMC minutes being released, we might be anticipating a direction that the market may move after that FOMC announcement of the minutes comes out. Of course, we had some breakout trades, and in the pre-market, we looked to see if futures were overbought or oversold, which we can still do, again, by taking a look at the Dow 30 stocks. So let me just review this one. When we're assessing the cash market, comparing the S&P and the Dow specifically, the S&P index, or sorry, S&P futures, are the S&P index, okay, which is the top 500 of the companies in the United States that have the largest market cap, okay, and you have the top 500 companies in there that have a certain market cap, a certain volume, and they're kind of where everybody trades as far as banks and institutions, and a lot of mutual funds and such, so it's become a very good gauge for us to pay close attention to. All the Dow 30 stocks trade on the S&P 500, and of course on the Dow. Now, why we use this information is we have an understanding that the futures are a derivative product. And what a derivative means is that the price is derived from something else. So in this case, the S&P futures, the price of the S&P futures is derived from the SPY. The SPY, Exchange Traded Fund, is derived from the individual stocks that make up the funds. Okay. The S&P futures is a market capitalization weighted index, which implies that the larger market cap stocks move that index more than the smaller market cap stocks, okay? Just a little background on that. Now that futures follow something, futures follow the cash market, because the future is the right to buy the cash product sometime in the future or sell it in the future. The Dow 30 Industrial Average is a price-weighted index, whereas the S&P, NASDAQ, and Russell are all based on market capitalization. So we use that information with the Dow 30 being a price-weighted index, and we take the number of Dow stocks that are greater than 94 cents positive and greater than 94 cents negative. So we have 1, 2, 3, 4, 5, 6, 7 that are negative, 3 that are positive. So let's net the results. 7 minus 3, we got 4. Since there's more negative, it would be negative 4. Take that number and multiply it by 2. That would give you a value of cash. 4 times 2 would be 8. Cash market equals negative 8. Take that number now and compare it to the net change for the S&P futures. Okay? S&P futures are negative 2.3, and the cash market is negative 8. Right now, we could say that futures are overbought relative to cash. Now, generally speaking, when futures are overbought or oversold, on the S&P, we like it to be overbought or oversold greater than 4 points before we start taking action to look for a trade opportunity. Okay? Now, when cash and futures balance out, well, that's when the market kind of quiets down. Price entering a demand zone or a supply zone when futures are balanced does not often get a big momentum move out of that area. On the other side of that, when futures are overbought going into a supply zone or oversold going into a demand zone, these can become great trading opportunities. Using the leg-based group of candles, you can manage your risk accordingly. Okay? Now, this morning and till now, the S&P futures are inside the prior day's trading range. Okay? Now, on inside days, very often the gap fills the same trading day. So the S&P has filled the gap or come back down to settlement price. Okay? So the direction in the early morning session was to the downside. The environment was choppy, designed to take your money. We are expecting more of a trending market with the Globex range, okay, being less than 40% of the daily ATR. We just haven't started that trend yet. We just had a lot of chop, and we've had a lot of uncertainty at the moment. Okay, that longer running trend may be established after the FOMC minutes are released. Don't know. Price has not dropped into a demand zone or a supply zone that I can take a trade on these higher time frames. And we're seeing the equity indexes just go back and forth. NASDAQ is still working on filling the gap. It got really close, but not there yet. Inside day, when the market opened, very high percentage of the time, we will fill the gap the same trading day. Dow. Dow has filled the gap, okay? Inside days still. We don't take breakout trades on inside days because they often will take your money. You get these sharp whipsaws back. So we are waiting for price either drop into a demand zone or go into a supply zone before we have an opportunity to take a trade, at least on the Dow. On the Russell. Russell, we are still short from our live trading session. Here we took the breakout trade. Okay, we took the breakout trade because Russell did break the prior session's high. It met our criteria. Once the inside day has broken, you can take breakout trades. Okay, now taking breakout trades when price is still inside the range and has not broken is very high risk. Okay, you do end up donating to the market for most cases. Okay. The Globex range is small compared to the, it's actually about 1/3 of the daily ATR. We are expecting a bigger trending market. Now, the Russell is the one that's actually given a better trend at this point. Whereas the other bigger indexes like the S&P, NASDAQ, and Dow, okay, they're not giving us much of a trend at this point. Just back and forth within the range. Okay. Crude oil, it just came down and missed. Did we get to 90? Oh, nope, missed it. Okay. Not there yet. On the crude oil futures, larger time frame, price had that base action, which we have mapped up here with the support and resistance. Price did drop back down and fill the gap. Okay. Now the gap fill is where a lot of novice will get in. And of course, they're making a little bit of a bounce. It's okay to trade with the novice if you are aware that you are trading with the novice. Okay. Sorry, I forgot to transition that screen. But when we're looking for demand zones or supply zones, we will be looking for price to come down. And I have this range between 82.91 and 82.71 is where I'm looking to buy within that buy territory. So I'm going to go out to a little larger time frame and help you see that. Okay. I have my resistance level where price was meeting the sellers. And then we have the buyers down below. Every supply zone or demand zone must be either in a buy territory or a sell territory in order to participate in a trade. See, price just came down here and bounced off of old resistance, okay? We are still looking for price to come down and find the buyers within the buy territory at the origin of a big move up, okay? And we're looking for that imbalance of orders. So we're still looking for crude oil to come back down between 82.91, 82.71, okay? As you look over here, we can find the leg base group of candles on the higher time frame. And you can keep, if that higher time frame is too big, like this one here, leg in, base, leg out, leg in, leg out in the base, okay? So we have that group of candles. If that group of candles creates a zone that is too wide for your risk management or your trade plan, then simply keep turning the time frame down. That's where we found the smaller zone, right around that 82.72, 82.71 area, okay? And that's where I got a large time frame and a small time frame zone matching up in the same place, okay? We're still waiting on that. Majority of the morning, we have been waiting for trades to come to us, okay? From the prep screen as well, I'm going to step back out to the prep screen. These were some of the other things we looked for as far as our trading plan, okay? When you identify your zones, okay, you need to see if the size of that zone fits your trading plan. And as it says, not my trading plan. When you decide what your risk management rules are and you identify a zone using the leg base group of candles, you need to assess the dollar amount risk, whether you're taking a micro, a mini, or a standard lot. You need to assess your risk by the dollar amount. Once you know that dollar amount and you choose to accept the risk, then you're good. It's just straightforward. You're not wondering why I lost money, okay, or why you made it, okay? You're refining your trading plan, and part of that trading plan means to know what you are willing to risk on any trade. That is not my trading plan. It is your trading plan, okay? All the 5-step process and the picture on the price chart will walk you through. But when it comes down to making the trade, you have to assess, is this a trade for you and your trading plan? I want to keep stressing that, okay? Because often traders will get in and then they'll place their stop, and if they get stopped out of a trade, they'll say, oh, that was too big, I shouldn't have done that, and so on, okay? Well, we are covering a forward-looking technique where we have an entry, a stop, and a potential target, okay? We know either the stop is going to work or the target's going to work, and anywhere in between, you can always take a profit or a small loss. That is up to you. If you alter your trading plan, often You alter it because the market conditions have changed. Note the difference or the change in market conditions as to your reason for exiting the trade early and not letting the trade work out to the opposing supply or the opposing demand zone. Okay? When we have strong moves down or strong moves up, we often have to wait for a fresh accumulation of orders to be built. Now, if price is dropping down and has not come down to the supply zone, okay? Let's use the crude oil for that example, okay? Notice here on the 5-minute chart, we had a big drop, okay? But price has not intersected with the demand zone, okay? Either I'm going to take a trade long in a demand zone, or I need to wait for a fresh accumulation of orders to form. Now, a fresh accumulation of orders is going to have, if I drew out the right side of the chart here, and I would have right now 2 touches of resistance, okay? I would need to see a third touch, a pullback, before taking the breakout trade, okay? See, I have to qualify my resistance. Now, this would have the picture of a fresh accumulation of orders if this played out as I have drawn it, okay? Right now, there is not a fresh accumulation of buy orders coming in, okay? There's some profit taking, potentially. But once that fresh accumulation of orders is identified, then you can participate in the trade. Or you're simply going to have to wait until price returns to a quality demand zone, okay? All your demand zones and supply zones should be located in a buy territory or sell territory. If price gets close but does not hit your zone, then wait for that fresh accumulation of orders to be formed before participating in the move back up. Now, occasionally you can just hit the button and make some money, okay? Make a quick trade. Very often, if you do that once or twice, then you're hooked on it, and you start becoming more of a day trading and scalping. Nothing wrong with that style, as long as you know that there's not a lot of long-running trades in that day trading active income style of trading, okay? Okay, come back out. Another thing here, check your emotions. Okay, this is a big thing. Medical conditions can play on your emotions. Family conditions or things that are happening with the family that day can play on your emotions. You can be upset that news or economic announcement came out, stopped you out of a trade, and then went in your direction, okay? One of the exercises that I use for myself is I go out on YouTube and I look for some of those frequencies that help me concentrate and feel peaceful, okay? Some of those tones that help me with my emotions while I'm putting together my trading day and doing the pre-market, okay? That helps me concentrate on what I'm wanting to see and that picture on the price chart, okay? And we all find ways to help us with that. Now, some people would like to listen to rock and roll rather than some classical music or frequencies to help healing the brain and such. Look, it's all up to you. But make sure you check your emotions. You feel good about the market or you feel kind of uncomfortable, okay? Now, when it comes to checking those emotions like that, you check them in the morning as you start to roll out of bed. Ask yourself, how do you feel? You feel good? You feel awake? You feel alert? Okay, you need a glass of water. You know, a whole bunch of things there, okay? Now, after you have completed your pre-market training or pre-market prep, you have to ask yourself the question again, how do you feel? What are my emotions at this point? What I have designed here at themarketinstitution.com, okay, is a very step-by-step, very rigid way of looking at the market and information gathering. As you gather more information about the trading environment while you're doing your pre-market prep, you may feel very excited for some excellent trades, okay? And the zones are close, everything looks good. Then on the other hand, you might be going, I feel uncomfortable. Nothing's set up. My zones are so far away. Economic reports are not there, okay? See, all of these things will alert you to help you understand the trading environment when you check your emotions. Now, the other things that we check, not just our emotions, okay, is some things that are outside the price chart. 10-year yield dropped into demand, along with the US dollar into demand. Globex ranges were small, indicating a trending day. As an observation, today is the fourth Globex session where we've had a small range, fourth consecutive, okay? Now I'm bringing in some other information, okay? We can all visualize that street corner, and we can visualize the traffic, and if I say it's a 2-lane versus 4-lane or 8-lane, you guys start to gauge your risk. Now, a 2-lane road in the country at a crosswalk, you kind of got lower expectations. There's not so much risk involved in that. Versus going into Manhattan or New York City and coming up to a crosswalk, okay, the whole vibration is a different vibration there, okay? So your risk level starts to, you start understanding your risk level at that point, okay? When we gauge the market conditions, I, for myself, need some things that are very logical and specific that I can apply a measurement to, okay? Now, some of those specific pieces of information I put on the price chart each day. What's the prior session's high? What's the prior session's low? Where is current price relative to the high and low of yesterday? Looks like we're right in the middle again, isn't it? Okay. We also identified the Globex high and low. Now, the Globex high and low can help me establish the overnight range. If the overnight range is very wide, then I know there's a strategy of looking for a demand zone below the Globex low or a supply zone above the Globex high for a very reactionary and more volatile change in direction for a trade, okay? Meaning, if we have a wide overnight Globex range, okay? Wide meaning it's 70 to 100% of the daily ATR. It may even exceed 100%, okay? And that does happen. And then we use that information and understand that if it's a wide range, then we're looking for an immediate pop up or pop down into a bear trap or up to a bull trap. And we're looking for an immediate reversal, a trade that can be very volatile and get some strong reaction to it. If it's in between about 40 and 70, it's kind of that normal area where price opens up. Our expectations are looking at whether that Globex range is inside or the opening price is inside or outside the prior session's range. And we understand where that Globex range, using that information, okay? Example, we had a Globex range today that was 21, almost 22 points, okay? Now, a small Globex range would be 0 to 40% of the daily ATR. 22 points it fits that criteria for a small range. And we're still inside day. So inside day, small range, ooh, that's tough. Almost like the market is waiting for something. What is it waiting for? Well, FOMC minutes to be released, okay? Everything is priced into the market ahead of time. Okay? Banks and institutions have their hedges on the outer extremes based on a percentage or based off of supply and demand areas, or leg-based group of candles are often there. So the reaction to a report or an announcement, they've already hedged their risk to the upside or risk to the downside. We call that a hedge. Okay? So a couple things. Prior sessions high, prior sessions low, and where did price open relative to that? Did price open outside the prior sessions high or low? We call that an outside day. Okay? If price breaks the high or low, that is also an outside day. If price is opening outside the prior sessions high or low, often it is a gap and run scenario, not a gap and fill. If price is inside the prior day's range and has not broken, it's between 85, I would say 85% and higher chance of the gap filling the same day. If it's inside, then I'm expecting, hey, this is a choppier market condition. I'm expecting choppy market condition. I'm going to wait till 10:30, 11 o'clock and then look for my trades intersecting with demand or supply at that point in time. Also, I refrain from taking breakout trades while price is still inside. Now, if at some point during the Globex session, price breaks outside of the prior session high, it's an outside day. So the probability of filling the gap when it's an outside day, but price opening inside the prior day's trading range, okay, I would say is about a 70 to 75% of the time those gaps will fill. So the higher probability of a gap fill is when price gaps up or down inside the range versus outside. A less probability, about 70, 75% of the time, is if price breaks a high or low, it becomes an outside day, but then price opens inside the prior day's trading range. Our expectations are there as well, okay, that about 70, 75% of the time the gap will fill. Should price open up outside the prior session's high or low, very often the gap does not fill the same trading day, and we tend to have that gap and run, okay? So, I mean, there's a lot that was built into that pre-market routine, okay? Very logical. It's no room for my opinion and how I feel the market's going up or down. It just was, hey, this condition, I documented 100 times, 85 out of 100 times, yeah, it filled the gap, okay? These other conditions, yeah, it filled the gap about 70% of the time. Okay, outside the prior session high and low, oh, wow, a high percentage of the time the gap didn't fill the same trading day, but took a few days later to fill. Anywhere from a range of 4 to 10 days is when that generally happens. Now, on the charts, I just want to point out, I think it's over on the Russell, nope, not the Russell, yeah, here on the Dow. I still have labeled up here an unfilled inside day gap. These are often places that price would like to return to. So I just want to look back. I'm going to go to a 90-minute chart for a quick reference, because I want to see about how many days we are into this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, and it has not filled the unfilled inside day gap, okay? All the other ones have been filled, okay? So I know we're getting to that outer side, outer edge of when those unfilled inside day gaps are supposed to fill. On average, we'll see anywhere from 5 to 10 days it will fill, but in some cases it can be a little bit longer, okay? Breakout trades, so you got a breakout, Price popping back up, a lot of whipsaw around this. Well, price is still inside the prior session's high and low. Inside days are choppy and they're designed to take my money. Okay? Breakout trades are often very aggressive ways to get in the trade, but you're generally on the wrong side of things. This is why we don't take breakout trades on an inside day. We wait till price is broken the high or low of the prior session, or prices return to a demand zone or a supply zone. Okay? How are we doing with the NQ? Quiet. Stocks. Any questions you guys would like me to cover? Okay? I know we're going over a lot of things from the live trading room. Why did we wait till later in the session? Well, we just explained. Most of the indexes were inside the prior day's trading range. Okay? It was more, how do you want to say it? It was a better environment to wait for the trade. Okay? Now, looking at the NASDAQ on a 20-minute chart, I see prices hit that prior session's high, and then twice, now 3 times up in that area. So I'm going to use and plot where we had 3 touches. As if that news comes out positive from the FOMC minutes, we may see prices rally strong to the upside. If they do rally, I want to be able to take a breakout trade above the prior session's range. Okay? Support or below the prior session's low. Okay? A breakout trade is part of understanding supply and demand. Okay? You can't have a supply or demand zone without a breakout trade. You can't have a breakout trade without a leg-based group of candles forming before price breaks out. Okay? See, as we start backing up and we say, oh, wow, I only take supply and demand trades. Okay? Well, what's that picture look like on the left-hand side of the chart? As you look at that picture on the left-hand side of the chart and you find ones that have already happened, picture-perfect past trades, okay, you start to realize, well, wait a minute, it's already hit the demand, it's already missed the breakout, okay? So what were the characteristics that made the breakout trade good and made the supply and demand good? Well, we got 3 touches of resistance, okay, depending on the buy territory, where that low pivot is at. All of these are mechanical things that each and every one of us can document and verify. And that's important as new traders, to be able to document and verify your information on the price chart. All right, coming back out to, I'm on a 750 tick chart. Now I'm trying to get my bearings where I'm at. I can see that this range over here has a resistance area. And we can see that there is a decent support. Price has broken that twice. Between all of this, we're in a dead space. Breakout trades should work on the dead space, as long as we have broken outside the prior day's trading range. So, NASDAQ, price did break by a very small amount above the prior session's high, so it is an outside day, okay, at this point in time. So with it being an outside day, I can take breakout trades. Using the BKX to participate in that breakout trade, I want the BKX to be below this 8-period simple moving average. See, right now it's on the bearish side of the fence, and I'm looking to take a bearish trade, okay?
Order filled.
Okay, we've got our three touches, price breaking down. Looking for that gap fill, just looking for a small move down. NASDAQ is the one left and NASDAQ and the Dow are still there to fill that gap at 15,281 for the NQ. Okay. Before that breakout, there was a leg base group candle. Stop loss on this would have to go up to that 15,309. Okay. Target just to the gap fill, and we also have that support area just below it. What we need help from right now to get the index to continue lower is to see what each one of the stocks are doing on that NASDAQ index. But I'd like to see is some big red candles since I'm short. If I start seeing some green candles on the stocks, I know I have a few minutes to get into or out of the trade. See, the way this works here is that when we are using and trading with futures products, futures always follow something. The NASDAQ futures is a market capitalization weighted index. What that simply means is the larger market cap stocks move the index more than the smaller market cap stocks. So I am monitoring on a small time frame Apple, Google, Nvidia, Meta, Tesla, Amazon, Microsoft, Netflix as the top large market cap weighted stocks on the NASDAQ 100 index. And these stocks moving together, okay, accounts for about 50%, 47% of how the NASDAQ index moves, okay? It's a price-weighted index. It's a market capitalization weighted index. So these large market cap stocks will move first, and then the futures will reflect that in a small delay. Futures do not have market makers or specialists. It's just a computer. The computer name is called the Globex, okay? The computer system that matches orders around the clock 24 hours a day, okay? So the Globex system, but the Globex range is also referred to as the overnight or extended hours, okay? The Globex is what processes the orders and adjusts price up or down, not market makers, specialists, and so on. This is why we looked at the futures, whether they were overbought or oversold, okay, relative to the cash market. In this case, on the NASDAQ index, the stocks are the cash market, okay? We're not getting much of a breakdown, are we? Still looking for that gap fill. Leaning on the BKX over here. As long as it's below that, I'm still looking for the move down, below the moving average. Still in the Russell. Russell's still making some headway. First target on the Russell is going to be roughly about that 1778-ish. Okay. The demand zone, 1771. Okay, we're getting closer to the 2 o'clock hour. We'll keep watching on that when the FOMC announcement or minutes gets released. All right, we have filled the gap on the NQ, finally. Okay.
Order filled.
Taking the profit on that, okay? and expecting to bounce up. Now it could go a little bit lower into that support. I would expect that too. But I do expect a bounce here as we fill the gap. So let's double check. This morning in the pre-market, nice job, Chris. You stayed in that the whole time, or you? Very nice. Now we're starting to get that move a little bit further down. All right, so I'm looking to see if we have any other products setting up. Platinum worked out really well today. Still looking for the breakout on corn to the upside. Still have about 2 hours left in the trading session for corn, wheat, soybeans, soybean oil, soybean meal. I do have an order on wheat set up, waiting for that 549 area. And what else do we have over here? Okay. Looking for Swiss franc coming back down to demand. Looks like crude's getting a bounce. All right, so let's go back to crude oil. Crude oil had the support. It broke that support. It did not come into a demand zone, but we are getting a bounce back up. Has not produced a fresh accumulation of orders, so I'm not worried about missing out. As price comes back up to the origin of the drop, I do want to look for that leg base group of candles, okay? Now we do have resistance, we do have support, but we still could be looking at this whole range as a potential sell territory. Okay, but I understand the risk is elevated. Yeah, it looks like even on a 20-minute chart, we do have a leg base, okay? Okay, so a short opportunity, 85.34, 85.74. And maybe we'll go back down and finish filling the gap. Well, it looks like we might have filled the gap. Close. Okay. But my next trade setup on crude oil is waiting for price to come back up to supply. Now seeing what that picture looks like and the structure. Structure is important. We made a lower high before price broke out, okay? That means that we're going to have our zone is going to be closer to the breakout point, okay? Excellent. Rules, processes, the more we document them, the easier it is to see on the price chart. I'm just looking around to see if we have any trade setups. Now, we do have this nice support right here on the S&P. As the markets get ready for the FOMC and minutes to be released, I want to take a moment to help you understand the dissemination of information, okay? So as information, news, reports are being released to the public, okay? And I also want to make you aware of where this came from, okay? And then we could see the ramifications behind it. When it comes to a news event, let's face it, the event has to happen. Somebody has to acknowledge that it is an event. Somebody has to document it in writing or getting some selfies or some pictures involved in it, okay? Once that information of the event has happened, okay, once all of that has happened, it has to go into like a news media, a pool, okay? Now, in that pool, somebody has to verify the information. Somebody has to edit the articles, put some pictures with it, dramatize it up, see where it fits into their regularly scheduled programming. Can it be breaking news? Okay. Can it be casual news and released at a later time? Okay. Always remember, news reports something that has already happened. Even if it's breaking news, and I've verified this many times myself, okay, breaking news stories are generally, on the small side, 45 minutes old. It's already happened. It's just the information is now being disseminated out and people are getting a hold of it and price is reacting off of that once the crowd gets aware of it. So the SEC, Securities Exchange Commission, deemed that releasing news as soon as it was available is not what they want to do. So what happens is they place all news, economic announcements, FOMC meeting announcements, they place it in an embargoed area and then they have a scheduled time that they release the news. Much like what we're seeing with the FOMC minutes come out. Well, the FOMC minutes that are released today were from the FOMC meeting that we had 3 weeks ago, okay? Or the announcement that caused the markets to go crazy, okay? Now, the White House also gets all economic announcements minimum 24 hours in advance in order to protect the markets. Okay? These are things that we need to know about the news. Why? Because when the market reacts to a news or an economic event, it is reacting because people are waiting, that's low volume, okay? When the volume does kick in, price shoots up to find the sellers, shoots down to find the buyers. Now this reaction is the algorithms in the market. See, if there are no buy tickets, price has to drop to find the buy tickets. If there are no sell tickets, price has to shoot up to find the sellers in order to make a market. The important thing to know about algorithms and news, as we're talking about news, okay, is that algorithms' jobs is to process orders. If there are no buy tickets, price will continue going lower until it finds buyers, okay? If there's no sell tickets, price will keep going higher until they find sellers. The reaction that we see when a news announcement comes out, that reaction is based on price shooting up to find sellers, shooting down to find buyers to make that market. The reaction is greatly due because of lack of people in the marketplace, okay? And lack of volume. Now, all news is priced into the market ahead of time. Banks and institutions have access to these news, sometimes few minutes. White House has 24 hours in advance, okay? And of course, the people that produce the report or the news also would have that information, okay? Hold on one second. I'm getting a little more outside noise. It just seems like they want to do all that cutting trees and landscaping right when I'm doing a presentation. All right, so watching what's going on here with the S&P, markets are descending. News is a lagging event. In the case of an FOMC announcement where everybody's waiting for that, okay, you have to realize that the vote to whether to increase or decrease the interest rates, that is a vote that's taken at 12:30 before they go to lunch. Okay? So somebody's sitting on that news for an hour and a half. All right. We might get both these trades. Okay? Excellent. Anybody still in the Russell? Okay, so I have three contracts micro contracts that I am short. Okay? And I'm looking to go long about that 1771-ish. I would like you to notice over here, and I'll take this into a little more of a lesson now. And this is an important lesson to understand. Will price go deeper into the zone? Will I be able to use this zone twice? Now, if you can use the zone twice, then generally you can use it a third time, but the third time then creates a support or resistance. So a couple of things I have going on here. I'm going to put the blue dots on here so you can see that I do have a leg base group of candles. Okay. So as we are examining leg in, base, leg out, base, there's our group of candles. We know to place our proximal line on the first base candle body after the leg out. We know where to put the distal line at the lowest wick, tail, or shadow of the entire leg in, base, and leg out. Now I want you to recognize the leg candle, the size of the leg candle, or multiple candles. They all have to be consecutive. That is the size of the leg candle inside the zone. Now looking at the leg candles leaving the zone, in this one here, it's pretty obvious that the leg candles or multiple candles leaving the zone are much greater than the leg candle in the zone. Now, why is that important? That is important because when the situation is like this, leg candles leaving are bigger than a leg candle in the zone, this zone can be used multiple times. Very often, the first time is a proximal line entry and a bounce, and then price goes deeper into the zone and then comes out of it. Most often we use the zone twice, okay? Now, with that same scenario, leg candles leaving the zone bigger than the leg candle in the zone, okay? These are most common, this group of candles and the way the price leaves the zone, most common when a support or resistance level is being created. Yeah, support and resistance have to be created, okay? So if you look at every support or resistance area and you look far enough left, you will start to see, and turn the time frame down, of course, that each support or each resistance level also has that leg base group of candles to start, okay? If the leg candles leaving are bigger, then often you can use that multiple times, which also implies that that group of candles can be responsible for creating a demand or sorry, a support or a resistance area. Okay. On the other scenario, other side of it, what if the zone appears to be wide, but the leg candle leaving is small, and the leg candles in the zone are bigger? Now, very often, those are not groups of candles that turn into a resistance or support area. You may only use the zone one time, and it is always a proximal line entry. If you're expecting a proximal line entry when the leg candle leaving the zone is smaller than the leg candle in the zone, okay? Did I get that right? Leg candle leaving smaller than, yeah, okay. You only use that zone once, and it's a proximal line entry. If price goes into that zone 1/3, 1/2, often you will get a bounce back up, whereas you can get out at break even. So if you've ever gotten into a trade from a demand zone or supply zone, price came in, triggered the order, and bounced out, but a few minutes later dropped back through that area, you want to go back and examine the leg base group of candles. You want to see all the things that entail around it. That way, going forward, the next time it happens, you're more prepared. For this Russell trade, we took the breakout going short. Okay? Let me put an arrow. So we took the breakout. Okay? As price is dropping down to our prep screen zone, we also noticed that we had a large pocket of points over here. And I want to point out what that pocket of points looks like versus having a speed bump over here. Okay? A pocket of points is a very large move in price with very little volume. Often these areas are retraced. We were talking about this in the live trading room. It's important to cover that again, okay? That we expected price to go all the way through this. So this is where I expect a bounce, 1771.70. I will look for taking a profit on 3 contracts, and I will look for then taking the trade back out of the zone. If I choose to set it up ahead of time, then the first bounce, I have to anticipate taking a quick profit. If I wait for the zone entry, price going deeper in the zone, okay, I would not be able to set that up ahead of time, but I would have to wait till price comes into the zone before I can take action, okay? So there's a little timing on this. Yes, the risk is elevated, and it's possible you get a bounce out very often, 1-to-1, and then price comes back down into the zone, goes deeper, okay? So very good on that, and I'm glad that one's working out for everybody. All right, so where are we at on crude? Crude's still getting a bounce back up. Nice recovery on nat gas. Let's look at this as a sell territory. See the structure in here, price broke through, so it's a qualified sell territory. Okay, we understand the risk is elevated taking a short trade because we do have resistance up here. And this area in between is what we would refer to as a dead space. So here we have a drop-based drop picture. If we want to participate in this, we need to find that leg base group of candles. I'm on a 500 tick chart. We made a lower high before price broke out. So our main focus is looking right in this area here before the breakout. 500 tick, let me go to 501. And what I'm doing is just changing the picture one tick at a time, 502, to accomplish identifying that leg base group of candles. Okay, 503. Now, much like a microscope, and looking for that leg base group of candles, I can adjust the microscope down or I can adjust it up. Okay? And usually I'll go about 5 ticks down or 5 ticks up to see if I can find it. And it's not doing too well going up in price, so I got 5 ticks. I'll start going back down. Oh, there it is, right there. Okay? So by adjusting it to a couple of ticks, I have a leg, base, 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 leg out, and a base. And there's a supply zone. It's in the right location, located in a sell territory. Now, once I have my zone identified, I can then take the little blue dots off and I can return to a smaller time frame. But before I do that, let's reiterate a lesson that I just talked about. Here are the leg candles inside the zone. That's the measurement. Here is one leg candle leaving the zone. So the leg candle in the zone is bigger than the leg candle leaving the zone, so this should be really close to a proximal line entry. Okay? So for this nat gas trade on this tick chart, we recognize that price is in sell territory, it is in a leg base, and price should not go too deep into the zone. Should be a proximal line entry. Okay? So I'm going to place an order, 3.345, taking the trade short. Okay? And of course, we'll manage our risk as the trade comes into it. Right now, my risk is right to this little high. I do not expect price to go too deep into the zone. Okay? Because of the way the leg candle in the zone, bigger than the leg candle leaving. If it gets into that zone more than halfway, then chances are it's not the right trade. Okay? This trade is elevated risk because of the dead space in here. Okay? I just want you to be aware of it. I did place the trade, and we're looking for price to move down 3.345, number 3 confirmation entry. And we're looking for a short-term profit, 3.319. Okay. All right, so let's just double check. S&P, NASDAQ has filled the gap. S&P filled the gap. Dow's filled the gap. And Russell continuing its move down. It has also filled the gap. In the morning session, I want you guys to reflect back on the morning session, okay? When the markets were opening, just before the open, and you heard my comments about the gap fill. Now, often these comments can be, people laugh, say, oh, it's never going to happen, okay? It's never going to happen today, okay? It's going up, the trend is up, and so on. Again, I try to exploit this as many times as I can so that you get into a position where you will document it yourself. If price gaps up or down inside the range, gaps fill often the same trading day. Today, you got to witness that again. Took a lot longer on the NQ to get that gap fill. Russell was first. Then we had the S&P, followed by the Dow, and the NASDAQ. All the equity indexes have filled their gap, okay? Greatly in part, they're inside days. All the indexes started off as an inside day. And that gap fill happens most often at the time. Okay? So, waiting on a couple of trades. I'm still waiting on wheat. With the inside day information in the pre-market, I was more inclined to trade some of the other candidate picks that we had rather than trade the equity indexes. On inside days, the equity indexes later in the session, 10:30, 11 o'clock, to get some of the better trades. Okay. So we just set up a trade on nat gas where we see the breakout, and now we're seeing price come back up. And from the nat gas chart, we drop down to a tick, and we're looking for price to enter this trade as price breaks that proximal line again. Okay. Let's see. Platinum was a great test. You can see that price moved out, tested it once, tested it twice. So, curiosity. How would you visualize the leg-base group of candles in this area? If you can't guess at this, you've got to adjust the time frame to get it. Let's go on 30-minute, 20.
Order filled.
18, 17. Oh, there we go. So I dropped down the chart. There's no magic in a 17-minute chart. It's just I had to adjust it to get the leg, base, base, leg out, and base. Okay? Now that I've identified the zone, this is the size of the leg candle in the zone. And this is the size of a leg candle leaving the zone. When the leg candles leaving the zone are bigger than the leg candle in the zone can be used twice. Often the first test is a proximal line entry. The second test, price goes deeper in the zone. Okay? So a very good example of this, okay, and what we're seeing on the price chart here, okay, is that when using that group of candles, you need to look at the candles, multiple, leaving the zone. Are they bigger than the one in the zone? If yes, these type of zones often turn into support or resistance areas as well. These type of leg-based group of candles, you can often use a zone twice with a high degree of accuracy or certainty, okay? In sequence, most often, 90% or better of the time, the first test is a proximal line entry, and the second test, price goes deeper in the zone. Now, understanding that, you could take and participate in a trade move to the upside off of the first test, and then you could wait for the second test and take it again, okay? So great observation on that. That was a good little validation of what we were talking about, okay? All right, let's get out here for a moment. Dollar. Ooh. Dollar's looking like it's trying to change direction. Okay. We broke a downtrend. Price hit demand. And now we're seeing that there is a resistance area being set. okay? So we could anticipate that price could break out and start moving higher. On the yield, yes, in a downtrend, but we have not made a lower low to continue the downtrend. We have made a lower high and we made a higher low. Things are kind of pinching off. Some traders may see this as a triangle pattern. And these we often refer to as continuation patterns. Okay? The trend in is generally the trend out. Okay? So we're waiting to see how the Treasury yield, 10-year yield, if it's going to continue up and the dollar is going to continue up, what should our equity indexes be doing? Yeah, these are all inverse related at this point. Okay? Okay, we have about an hour and 30 minutes left of the ag. Okay? Now, if the Treasury yield is moving up and the dollar moving up, generally the commodities have been moving lower. Okay? But we're also seeing a little bit of movement on the bean oil and a little bit of movement on corn. Okay, corn set for a breakout trade. Let's bring that one up. Let's break it down and get the right picture. Okay. Possibly building a buy territory. So we can look at the breakout above this level. Before taking the breakout, you need to have a leg-base group of candles completely formed. So we have our first entry, breakout with a big speed bump. And we got a leg base in there. We got a 2 candle pattern right there, okay? So the breakout, it's got 2 points in it. We're on a pretty small time frame, okay? Breakout 488, stop loss 485, target 490. Okay? So we're trading a Z contract in December, CZ23. And I'm going to place a trade right there at 488. 490, looking for that profit potential. And stop loss 485, 2/8. There we go. Okay. Now, at 2:20 Eastern is when these stop trading for the day. So if I'm not filled by then, I'll cancel the order. Okay, any products you guys want to look at? We got a few minutes here where we can go through and do our 5-step process. You have something you want to look at, you can type it in the chat while I recover. Actually kind of come back and look at some of the trades that we did. We had the NQ at the breakout and stop out. Another breakout And this is our Russell trade that we're still in at the moment. Breakout on the Globex low into the pocket of points, going to the pep screen zone, okay? And we're still in that one and watching that one play out. It's coming right towards us. Beautiful, okay? Some of the key takeaways. A day should be extra patient and not rush to trade. Equity indexes have a narrow overnight range, means longer running trends during the regular trading hours. The equities were inside day, choppier conditions, difficult trading environment. Inside days, we look for the gap fill and trade opportunity. Breakout trades are likely to fail. We also see when the brokers eliminated the day trading margin rates, so there was some additional volatility coming into them. But these were all things that we've been touching on, okay? Again, nice trade on the Russell. I did get back in on that one, get some of my profits. And let your trade work. Be patient. Make sure your stop loss is in place and it fits your trading plan. Okay. Pre-market trend, other takeaways. Trend was that we noted where the trend was. We were looking for buyers and sellers at that time. Light volume during the open, which caused some additional volatility. Identifying where the 500 or the 50 and the 200 moving average are at. Multiple time frame analysis, look for picture perfect setups. And for some outside influences, BKX, the bank index, the trend, the VIX, advancing issues over declining issues, or ADD, odds enhancers. All right, now that brings us back to doing a quick review on the 5-step process. Step 1, find support or resistance. Step 2, identify the sell territories and buy territories. Draw the boxes. Structure. Visualize the pivot points within the buy structure and draw them out as well. Not only visualize, but draw them out. This will help us find the areas within those structures where to find the leg base group of candles. Step 1, find resistance or support qualified by a minimum of 3 touches of support or resistance. Draw the boxes and label it. Underneath resistance and above support, show the buy territories and the sell territories. Plot out the structures using the support or resistance as those pivot points within the buy or sell territory. Circle the zone or circle the area where you're going to focus on looking for your leg base group of candles. Now, when we make higher lows or lower highs, they're generally closer to the breakout point. When you make a lower low or a higher high, they're generally closer to the upside or bottom side of the buy territory or sell territory. Once you have the area circled, adjust the time frame up or down and isolate the zone using the leg base group of candles and plot the entry and stop lines. Step 6, take a picture of it, document it, put it into your picture perfect past trade setups and draw them out. Hi Jens, noticed UVX jumped to like 32. I wonder turn reversal. What is a UVIX? UVIX? Or is that the 1-day volatility index? I'll let you answer that, and then I can come back to it. But as we start to, looks like Chris has put a stock in there, so let's go out and look at that stock. And it is SBSW. And she made reference to a 60-minute chart. Oof. Wow. On a 60-minute chart, just in this picture, okay, I can recognize an area where we have a resistance. Okay? Now I'm going to go out to a larger time frame. I need to look around. So I'm going to step out to 480 minute. All right, that gives me a little better perspective of where we are at. When analyzing any chart, you see something that catches your eye or it's something that you've been invested in for a long period of time. Okay, doesn't matter. Current price, go up and find a resistance that has been touched 3 times or more. Okay, you get your bearing. Then find a support area that's been touched 3 times or more. The area above would be your sell territory. Okay. Yeah, I'll pull that up in just a second. Okay, so we have, I just wanted to plot out our 3 touches. I'm identifying the structure, even though it's on a larger time frame. And we made a lower high before the breakout. And now I'm trying to find my sell territory. Because we made a lower high, I'm going to look close in this area for the leg base. Dropping back down to a smaller time frame. Going up to that area to find a leg base group of candles. I do have one right up here. It's in the circle still. And we'll look down below here, 30-minute, dropping to 29. $28. $25. Yeah, it's taken me a little while to dig into these areas here. It's got to be in the sell territory, okay? So you can continue to dig into that area. I'll try one more time frame down to a 20-minute, see if we can get it. Each time that you adjust the time frame to get that exact right picture, you are working on your discipline. Okay? And that's important. Be a disciplined trader and very specific in your charting and your pattern recognition. Okay? Is not to get outside of and start fudging it. Okay, so it looks like I may have something going on here. Leg. I have 1, 2, 3, 4, 5, 6, too many base candles, so I still need to go up higher time frame. two candle pattern. Oh wait, we have it right there. Thanks to the help of the computer. Like my leg base on 23-minute chart. Okay, so let's go back out to the larger time frame. Realize that we're waiting for the breakout, and we see where our zones are within the sell territory for potential profit. Now, notice the three touches are more on the left-hand side, low pivot on the right. This often is where we see price break out and then come back down deep into the zone before moving up. Okay? Thanks for posting that there, Chris. It's kind of a tough one, okay? So the higher time frames may be easier to map things out. Just want to take a look at the daily. Yeah, the picture's a little easier to read on a daily chart, but still pretty thinly traded. A lot of gaps on this one. Okay. All right, another great session as we went over trades taken. What we have left on the table right now is we're still waiting for Russell to come down to demand, and we're going to take this back up. In about 1 hour, you do have the FOMC minutes being released. Okay, so we are expecting some volatility. I will be over in the Discord room. I got a couple of phone calls that I need to take care of. So I'll see you guys over there. Have a wonderful trading day. Look for the email or the Zoom link in the Discord room tomorrow for our community trading sessions, which are always fun. Okay? A good time in there. Have a great day, everybody.